Hello, everyone. Greg Diamond here, editor of 10 Stock Trader at Stansberry Research. This is another edition of Diamond's Edge video. And before I get started this week, this is going to be an important week. NVIDIA earnings. With stocks back at new all-time highs, or indexes rather. But I have a plan regardless. Regardless of what, we have more inflation data too. Regardless of inflation data, regardless of NVIDIA earnings, I have a plan for what to do over the next, call it, week or two. So check out the link below, check out the URL for a new report that I just put together, a new video explaining some of the details of 10 Stock Trader, but also what I expect going forward. And for new subscribers who sign up, and obviously current subscribers, I put together a new report as well as a new masterclass video, and these detail both kind of the short-term setups looking for both in NVIDIA and the semiconductor sector, but also more long-term GAN cycles and how that plays out for the rest of 2024. So I think you'll like it. Again, check out the link below for more information. And this week, I'm also going to cover something that maybe not a lot of investors are focused on, although they should be focused on, obviously, NVIDIA and inflation and the rest of it. But let's turn to what I have on the screen here. And this is a screenshot I took last week from Bloomberg, and basically, according to Ned Davis Research, hedge funds have one of their biggest net short positions in the Russell 2000s. Okay, so the pain trade here, and what I mean by the pain trade is that what's going to hurt the most people, what's going to cause the most pain. If hedge funds have a record net short position, higher prices are going to force them to close that out, as that will be painful because they'll lose a lot of money. All right, so this is the fundamental catalyst or fundamental backdrop based upon positioning. Now let's look at the technicals, okay? So this is a chart of IWM, iShares Russell 2000, which obviously tracks the Russell 2000 futures contract, all right? And I've labeled here just a simple from this April 19th panic low, 1, 2, 3, 4, 5, for a possible big wave one high, all right? And then if we get this correction over the next week or two, and some of this will depend upon NVIDIA maybe, but definitely inflation and interest rates, okay? So let's say interest rates bump up a little bit, but we get this correction. Maybe it's steep, down to this 200-ish level. I noted this gap here in purple, okay? As you can see, this would be a correction. So if I see this correct, and then we start to rally up again, this is likely telling me that we're in breakout mode, okay? This could be a huge wave 2, wave 3 type of Elliott wave move. I've noted here June 14th to June 21st. Be mindful of those dates. This would be maybe a short-term inflection point. It's possible that we see, a kind of a bigger correction, and I'll show you what that might look like. It's possible we do something like this, okay, and then correct, and then we get the big move up. That is a scenario that I'm considering. But either way, understand that the net futures short position from hedge funds, in addition to we've already seen, the major indexes at new all-time highs, does the Russell 2000 finally catch up? The technical picture tells me it does, as long as the 190 holds, okay? And I see some type of one of these two scenarios where we get this low, whether it's later this week or early next week, or then maybe into mid-June, that's going to be a situation to buy call options. That's going to be a situation to establish a core position, as I like to call it, with 3x leverage ETFs, okay? So in addition to NVIDIA, in addition to inflation, check out what's happening in terms of the price action regarding the Russell 2000. I really think this is going to be an important market to watch over the next few months. All right. Thank you very much. I'll see you next time.